Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently up 0.71% to 47,031. Ethereum up 0.66% to 3947. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. Christmas can be a very joyous time, but for some people going through a life pullback, it's a little traumatic. I just wanted to reach out to you and let you know that the sun will come out again. There's always hope, and our love and healing thoughts are with you. You're not alone. Rule 774, master yourself to master the market. As a community, we focus on real wealth. Real wealth is much more than money. It's about maintaining a positive excellence life trend. When people go through life pullbacks, it's really easy to get upset and angry and lash out at others. But unfortunately, the lack of inner peace will cause a lack of outer peace and much suffering and harm and stress to the person doing it. A positive life trend based on positive excellence is all about gratitude and happiness, looking for the sunlight in the day. Even if it's really cloudy and overcast, there's always some ray of light that's there, something that can bring meaning to the day. Real wealth is all about money plus meaning. Why is meaning important? As Jesse Livermore found out, money without meaning is another form of poverty. Unfortunately, Jesse Livermore, the pioneer of day trading, actually committed suicide because he didn't have meaning in his life, as was noted by his note. Building up feelings of worthiness is really, really important. Being worthy of making wealth is extremely important to your trading and investing career. If deep down you don't feel worthy of actually making profit, you will self-sabotage through self-doubt. That's why we always must attack the twin problems of self-sabotage and self-doubt, knowing that you are unique. There's only ever one of you in this world. Therefore, you automatically deserve kindness, love, meaning, and every success in life. But that comes with a footnote. You must be kind along that path and that process. If you are not kind, you will find that you will repel wealth. Rule 138, all investors become traders every time they buy or sell. This is quite interesting. A lot of people don't look at this and say, oh, okay, traders and investors, they're basically the same. They are. Think about it like this. An investor buys, a trader buys, an investor sells, a trader sells. They just have a different focus. Traders must get it right. They don't have the time on their side. They must time. They must be very surgical in their precision. A lot of people get attracted to crypto because they see these incredible percentage returns as opposed to what they can make from the stock market or precious metals, and they think that they don't really need any skills or anything. It's kind of like a casino. They can just put the money down and it will double or triple or do really, really well. Unfortunately, that is not the case. Like everything, this is a professional discipline. It needs training and knowledge. That is not to say that people don't get lucky. They definitely do, and they can. But without knowledge, that luck will run out. Another well-known problem is investors and new people to the market tend to get called when there is a lot of certainty in the market. For example, before you got into crypto, you probably saw the prices going up and up and up and up and up. And then you popped in and you could have done quite well, but when the top came in, when the retracement hit, you became locked into your position. That is what smart money institutional investors actually do. That's what the institutions have to do to actually sell their incredible volumes. Professional traders make it their life's mission to understand what the smart money is doing and to align with it. I just wanted to let you know that the masterclass discount, the 90% off, is ending on the 31st of December. I sent out a lot of emails to people who had registered their interest in the masterclass. Unfortunately, I believe a number of those emails bounced or weren't delivered or went to junk or potentially promotion. So reach out if you haven't received that email and you were expecting it, or alternately, if you'd like to express your interest in the masterclass. What it's all about is I want to enable you to do what I do by transferring my 30 plus years of knowledge to you so that you can be more of a financial blessing to yourself and those you love. Just simply reach out and email me at kstandf@gmail.com and I will send you the coupon for that 90% off. I'd just like to thank the very kind masterclass members who have reached out and let us know, the community know, what they've experienced inside the masterclass. For many years, I lectured first and second year statistics. I helped my students understand advanced statistical concepts by the numbers 1, 2, 3, 4, 5. I made sure that they had all the foundations in place so that they could learn effectively and efficiently. This is exactly the kind of concept I've applied to the masterclass. The foundation section is open when you first join the masterclass. Then trend open ups. This is like understanding what the market is doing and getting early warning signals. Timing is all about understanding what to look at. Real wealth is all about the concept of how you prepare yourself psychologically to do the trigger event, and that is effectively buying and selling. Rule 184 is incredibly important. Profit requires patience. What people give is what they get. It will take effort to go through this process, but you're looking at a lifelong career and foundations that can make intergenerational wealth. I'd like to thank Vlad for his very nice comment. Hi Ken, really enjoying the masterclass. You're a great teacher. I've been looking at charts for years, and in a matter of days, I've learned more than in all the time previous. What you will find is the masterclass covers content that will not be seen anywhere else. It's about the practical application of skills into the crypto market. Thank you, RC. The masterclass is totally on another level. The more I learn from your masterclass, Ken, the more I learn how little I actually know, despite being a studious sponge on the crypto universe for 9 months. Thank you, RC. I just want to let you know that that special discount, the 90% off, will finish on the 31st of December. For everyone that joins the masterclass before the 31st of December, your very special foundation members, I'll talk more about that next year. A critical understanding in the crypto market is Rule 45, no alt can escape Bitcoin's gravity. Many people are certain Bitcoin has entered a bear market. They're certain as they were when price fell off a cliff after the China miner exodus. Please, if you're going short, one thing that you should always bear in mind, if you're not a professional trader, you should not be touching leverage. Leverage will wipe you out. That is what it's there for. It's not there for you, it's there for them. If you're leveraged and you're going short, please be very, very careful. The market could turn against you in a way that you will not expect. Please always remember Rule 114, markets penalize certainty. If you're absolutely certain that the market will go up, you will get penalized. If you're absolutely certain that the market will go down, you will get penalized. There is a reason that most investors and traders lose money. It's because they're addicted to certainty. Looking at the KS model, which is a crypto technical trading model based on institutional price psychology, we're currently in the bull market psychology phase, and we need to compare that past to past bull markets. One thing that we note down here, if we just zoom in on this, we're actually seeing that the relative strength indicator is starting to bottom out. What this basically means is the actual industry is starting to accumulate strength in its price. Be very, very careful if you are going short. And please, if you're new and not a professional, you should not be going short under any circumstances. Without question, there's a lot of negative news stories out there. Omicron, tapering, Evergrande, you name it, it's out there. But please be aware that we should only ever trade the chart that we view. We never panic. We have an institutional probabilistic fearlessness mindset. We just look at the chart and get the chart to tell us what the chart is doing. Let me just zoom in here for a minute. We can see that the current price action is starting to get above a resistance line. This is confirming that uptick in relative strength. It's still under a short-term resistance line here playing through. Price is almost in the I don't know where I'm going phase, but it is starting to turn around. This lower support line has been holding price incredibly well, and this was drawn out a very long time ago. Please bear this one in mind. Also, the support level of 45,881 held incredibly well. You might be asking, Ken, what have you got all these different colors for? I'll explain. Professional traders and investors always make in advance probabilistic choices. They look at the green area, what if things go up? They look at the red area, what if things go down? And they look at the gray area, what if it goes sideways and can't figure out what it's doing? That's exactly what I presented to you here, but just in a graphical format so you can see it more effectively. Based on past analysis, we could even come down in price to the 37,400 mark and it would be fine. In fact, we could expect a dip down because that would liquidate a lot of people. That's what unfortunately smart money is all about. It's all about creating uncertainty in the market. Also, the crypto market is all about hunting for stops. Crypto is all about looking for where stop levels are set and liquidating them. That's why you must be very, very careful about your stops. And of course, you only have stops if you're using derivatives or leverage, and you only use that if you're a professional. But always please be careful, because this is a hallmark, a cornerstone of the crypto market. Stop hunting is the behavior that the crypto market does. That's why we have Rule 130, make volatility your best friend. What this is actually saying is where the majority of people put their stops, that is probably where price is going. I've seen so many occasions of people both going long and short and getting liquidated in that move in both directions. Please be really, really careful of derivatives. They can smash your account. Instead, the focus should just be on scaling, getting the skills right, and then just scaling. Putting $100 down per trade, or then scaling up to 200, to 500, to 1,000 as you get better. Don't worry about going slowly, just get the skills right. We're looking at a couple of key levels. Of course, the 45,881 mark that's held incredibly well. There were some really good spike trading opportunities on that level. The 49,305 level, where price will come back into a neutral zone, still under resistance, but improving. You can see it's already starting to turn around, but we need to see what happens if it continues. The other one, 41,933, is a key support level. Based on past probabilities, it is probable that price could retrace down to this level, and we've seen it in so many times with this kind of pattern 3-4 times in the past year. But again, we just have probabilistic choices. We don't light switch. We don't go all in. We don't go all out. We just scale in and scale out. Looking to the past bull run, the 2016 halving cycle, we saw 20, 30, 40%, even 50% pullbacks on the way to the top. Please be really careful. Expect these large drawdowns like what we're going through now. It's really interesting. I wrote this article, the KS model predicting Bitcoin at $486,000 by May 25th, 2022. I wrote this 211 days ago. This is not something that's just popped up overnight. I am the opposite of any moon boy or anything like that. It's just mathematics. This actually came out at a time many influencers were talking about an October peak. Of course, October has passed. It's actually one of the most conservative models in the crypto space. I talk about this in episode 352 if you would like to have a look at that. Going back to our world events, we've got a number of things to talk about, but probably Omicron is one of the largest. We can see from the headlines on the Wall Street Journal, Omicron accounts for 73% of US COVID cases, says the Center for Disease Control, the CDC. We can see in the graphic provided here that there were very few cases, Omicron cases, on the 4th of December. Now they've increased substantially to 12.6%. Then just a week later, 73.2%. This is really spreading widely. Now, what does it mean for professional trading and investing? It may result in increased stringency, increased lockdowns. Members of our community are going through COVID and have been affected by COVID in horrible ways. Our thoughts and prayers go out to you all. One thing that we do notice, which is good news, the Omicron is not seeing a spike in death cases, thank goodness. But we can see around the world there's been over 500,000 new cases just in the past 24 hours. When it comes to the stringency index, we can see Germany is starting to shut down again, as are a number of other countries starting to increase their stringency measures. I know that many community members are stranded and separated from their loved ones. The sun will come out again, and please know that our love and healing thoughts are with you, and you're not alone. As the stringency index comes up and more countries potentially go into lockdown, we can see that there will be further debasement in fiat currencies. That just means that the fiat currency, the government-backed currency, will start to lose purchasing power because more and more money will have to be pumped into the economy to keep it going. Bitcoin and crypto are flights to safety from monetary debasement. That is very positive for the crypto industry. But that doesn't mean it's all positive and you should just light switch in. There will be a degree of turbulence. There always is a degree of turbulence. We can see the Mt. Gox reserves have not changed. There's been absolutely, utterly no remediation. I covered that in episode 332 if you would like to look into that in more depth. When looking at inflation expectations, we can see that they're coming down, even though there's been a large spike in the number of Omicron cases. What may happen now is that the government, the Fed, and the central governments, central banks all around the world may have to start increasing stimulus again. We'll just keep our eye on it, but we can see Bitcoin already starting to bottom out here. I'd like to thank Martin for reaching out and sharing this article. Indian Parliament's agenda for winter session no longer includes the crypto bill. We'll just have to see how the market is reacting to this. The best way to do this is to go directly to the source. Bitcoin in the local Indian currency. We can see that there's not been any spike up. For example, when the rumors came out that India would ban crypto, we had a sinking of Bitcoin in the local Indian rupee currency. We would expect a spike up on news like this. We're not seeing that just yet, but we'll keep our eye on it. And there's realistically only 8 days left for that parliamentary sitting. You can have a look at a lot more depth and a lot more in-depth research in episode 344 about the India potential ban. One thing that we must look at is Evergrande and the Great Wall of Chinese debt. We don't need to read any articles to understand what's happening inside the Chinese property market. We just graph them. Evergrande, Fantasia Holdings, Cynic, Kaiser, Greenland, Country Garden, Vanke, all have net debt of over $1 trillion. And we can see that their share prices have been falling off the cliff recently. There's been news that's come out that Cynic is in default now. We can see it stopped trading around the 20th of September. It's no longer there. We can see Evergrande in blue just plummeting down. If we look at Asia month-on-month change in Bitcoin price by Glassnode, we can see an enormous amount of selling throughout Asia. I believe this is the CCP trying to cover or create a bit of a war chest for a bailout. 2 months previous, China made crypto illegal on ramps, off ramps, and told everybody to basically sell their holdings. It would be unlikely that any people would just be waiting to the last minute. They were very strongly worded legislations that the CCP put out. Just to explain, that ban happened back here, not here, not at the top. That was the Evergrande default at the top. This was the Chinese law being passed that banned Bitcoin, and it actually made any Chinese resident working anywhere in the world on crypto an illegal activity. From this perspective, it's likely that we could get some down wicks into this red area. Just keep that in mind when you're actually going through the process. We always look at the concept of where is price going from these three probabilities. All the positive and negative news just gives us a bit of an edge on understanding where it may go, but ultimately price goes where it goes. And it's very often going in a direction that most retail traders and investors never see coming. That's actually why I share these deep dive videos, so that you can understand what are the headwinds facing, and they just turn into news headlines explaining things. If you've ever watched the film Wall Street with Gordon Gekko and Bud Fox, please have a look at that. That will show you how institutions play in the market. Let's have a quick look through the stock market, bond market, and crypto. Sometimes people say there's not enough money in the world to ever make crypto a larger industry than it is. What is probably happening is maybe a misunderstanding about how large the stock market is, how large the bond market is, how large the derivative market is. The derivative market is 10 times the size of the stock market. Just a little stat that you can put in your back pocket. Crypto is not crypto. It's the ownership layer of Web 3.0. People think it's a currency or some kind of fad. It is not. It's the next evolution, the privatization of the internet. We had the internet being controlled by major players, and it had to be because it was so incredibly expensive to run, operate, and maintain. But with decentralization, what happens is that people are pulled in through crypto ownership, all the governance, all the tokens. They represent ownership of the network layer. I think this is what people are misunderstanding. With the metaverse or omniverse, what could happen is that we could actually live in crypto. That is, experience a digital reality like Get Ready Player One. It's really good to look at sci-fi films. They give you an edge on trying to understand where the market is going. It's a very, very powerful tool and often overlooked. Altered carbon is also another one. It's potentially possible when we get to quantum computing to have digital consciousness. Goodness, what could it all mean as we go forward? I think that is still in the realm of science fiction. The human mind and everything else that goes with it is so incredibly complex, but just bear in mind that these things are definitely on the horizon. Maybe not now, but over time. And don't forget, good old Elon trying to colonize other planets. You're not going to take fiat currency with you. It just won't survive the journey. It's really all about digital transfer. Everything is going digital. We are going digital as well. We're literally on the ground floor of the next industrial revolution, and the difference here is that the people themselves, people like you and I, will be the owners of the infrastructure, the owners of the network. That's if we can understand what we're looking at. Looking at the stock market, we can see that the fear index, the VIX, spiked up and then it came down. That's actually a really good sign. Dropping fear means that prices go up. It's exactly like the crypto market. When there's extreme fear in the market, what does crypto do? It goes down. When there's confidence in the market, what happens? Price goes up. That's why I always buy at extreme fear. That's a professional investor's and trader's best friend. We can see the NASDAQ 100 has just simply come back to a level of support as we anticipated. Oil actually sold off back to a level of support and bounced. It was seeking to get through this resistance. It didn't make it. Let's have a look at the bond price. When bond prices rally straight up the wall, that means that we have to pay attention. What are we seeing right now? Nothing. It's just basically wobbling around a support line. Will it take off? Probably, potentially, but we'll just keep our eye on it. That's what we do. What about the yields? The yields have come back to a level of technical support. What have they done? They've bounced. That's why we have technical support there. What's gold done? Gold was doing really well. It's come back to test a line of support once resistance. What would we expect here? The probability of a bounce does exist. We need to keep our eye on bond prices and gold. Bond prices, because this is all about people saying, wow, I'm scared. I don't want to be in the stock market. I don't want to be in crypto. I don't want to be in anything. It's the end of the world. I need to get out. But don't forget, we never light switch. We don't suffer the light switch effect. We don't go all in or all out for anyone. What about gold? Why would gold go up? Gold is a geopolitically sensitive material. It's when wars are on the horizon, when pandemics flare, gold goes up. That is its function and purpose. That's why it's a really, really good gauge. The DXY, the US dollar currency index, hit support, and what did it do? A technical bounce. That's what support is for. That's why we pay a lot of attention to our support lines. Looking at the crypto fear and greed index, we can see there's a lot of fear in the market, but it's starting to turn around. People are starting to look at it and say, okay, I think things are moving in a positive direction. Buying fear, buying extreme fear is always the best thing that any professional can do. But it's very, very difficult. If you're new to the market, it's probably the last thing that you would ever want to do, but it's the first thing any professional does. Just summing up, we can see Mt. Gox hasn't moved. Omicron is increasing. Inflation and tapering. Inflation is not going too far. Tapering could definitely occur. Transportation, of course, the transport indexes are getting hit. What about Evergrande? It's bubbled along. They're in technical default anyway, and we always knew that that was coming. It's a great wall of debt, but the CCP cannot afford to let the Chinese real estate market fall. It will fall along with it, and they're not going to let that happen. When we look at India's CBDC, no problem. We've got some positive news, but it's not showing in the price yet. That's why we always look at the price. Very, very important. And the debt ceiling was pushed out to next year. What can we see? What is the conclusion from all of this? What we conclude from the actual chart, we always trade the chart we view. We can see support is being held really, really well. We've got over a key level of resistance. We've moved to the other side. I'll just zoom in there for you. We're seeking to start to approach this very short-term light resistance at around 47,583. We need to move up to the next level of 49,305 to get into any form of consolidation. We want to get into this gray box. If we look down below into the red, that is possible. We could sell off. There is a lot of negative news, but we don't ever light switch. We use this as an ultimate buying opportunity. As in crypto and as in life, opportunities reset daily. Every day is a new day. That's rule 28. Let's have a look at the 8 cryptos that we've been tracking. We can see Bitcoin is still under resistance. We can see Ethereum hovering around its support line, seeking to break out. We can see Binance coin, incredibly strong, very, very strong coin. We can see Sol in the starting points of accumulating strength. Poor old Cardano, ADA, is definitely under the weather. If this is the weather, ADA is under it. And we can see XRP starting to rally up on strength. That's looking really good. We can see DOT coming into a level of support, but it's a little bit weak. It's actually passed below that. So we could potentially expect to fulfill our first 10-5-10 fund level of 2047. We have a look at Luna. Luna is just going bananas. It's so strong. And when you look at anything in crypto, always go for strength. We can also see that Doge is consolidating around its current price level. AVAX doing really well. It's bounced, had a bit of a retracement, and it's come up again. We can see SHIB starting to stabilize around the current price level. Matic is also looking good. Bounce from support with positive air. This actually shows us that there's a lot of power in Matic. We always want to go for power. Litecoin is under resistance but consolidating. Uni under resistance but not as strong as Litecoin. You can see Litecoin's behavior. You can see Uni's behavior is going down. This kind of pattern recognition is absolutely critical for your success in crypto. Algo is under resistance as well. It's looking a little bit weak. It's looking like it's losing that support level. Chainlink is not looking like that. It looks to be consolidating mid-range in that level. That's potentially good. You can see Chainlink and Litecoin exhibiting similar behaviors. Let's have a quick look at some community favorites. We can see VRA, Veracity, following Bitcoin's fingerprint almost to the T. When Bitcoin improves, Veracity will do very well. We can see the same with Icon. A lot of consolidation around this level, looking really good. KSM looks a little bit weaker, but it's still under resistance and following Bitcoin's fingerprint. So when Bitcoin turns around, KSM will turn around. Same with IOTA. IOTA is currently under resistance, but it's following well. Let's have a look at Stacks, showing a lot of strength above support, which is terrific. RLC is below resistance. TRB significantly below resistance, and Cartesi is just following Bitcoin's fingerprint. This is what I say with your beloved alts. Please look at Bitcoin. If you don't understand Bitcoin, you'll have so much trouble timing your entries and exits from your beloved alts. Today's question for the comments is, what are you interested in buying? Please let me know and I'll see what I can do for you. Christmas and the festive season can be really hard for a large number of people, separated from loved ones or going through their own personal life pullbacks. I recently put together episode 372 to help give people a little bit maybe of a different perspective on how they could look at adversity. The sun will definitely come out again, and strength follows setbacks. You might like to have a look at episode 372. And remember, the sun always comes out again. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from, and if you have any questions. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.